Hello. Welcome back to another live trading session, traders. Welcome back to another live trading session beginning this on Tuesday, second day of trading week, and we are looking at few significantly important instrument to trade this session with all together. And after previous daily few trades, now we are looking at potentially to find some successful entry. We had our previous session also an entry. Now if you look at here on gold, and I'm looking at gold, traders, welcome, hello. Looking at gold, and also we will be looking at USDJPY and also how WTI is working on here. We see a few instruments currently showing trading opportunity. Among that, we are looking at on XAUUSD. On the, if you look at this daily market structure, and looking at first of all gold, and then we will be looking at also other instruments. So let's look at to see what kind of trading opportunity coming here today. Now the market is in a, if you look at, I'm specifically looking at on XAUUSD, and I'm looking at this market structure here, which is currently having a significant trend here. We will be looking at also the technical, fundamental, as well as the sentiment analysis before we look for any trade setup, and also we'll be going through in-depth analysis to see where we can find the trading opportunity. That you can see that this is the daily market structure. Now with this daily market structure, if you look at here, that we can see the market is having that trend. And in this daily market structure, we are looking at some entry from this. Okay. Bringing some of the trade that we are looking at. Okay, let's begin the analysis first, and I'm looking at first of all the technical perspective in the market. And before I look at that, I'd like to see that all the members are here. If you guys are here, make sure you like this stream and also subscribe to the channel if you haven't done yet. So let's begin first of all looking at the technical analysis here to see where the market is heading. Now first of all, looking at the monthly chart to see overall picture in this market. Now the first question might come, we are not trading on the monthly, then why we are looking at this market from the monthly perspective? Because this is a long term. If you look at that, this is the monthly market structure, which is bullish now in a pullback. Now that's very important to look at, okay, because after this initial retracement, we can expect the market to eventually bounce back up, but it is now on a monthly retracement, right? So which is critical to look at. Now if you look at the weekly, here is the market weekly price action. It's coming to from the weekly to an area of imbalance, which is basically in that zone, which is so far here. And in that area of imbalance, that looking at in that area of imbalance for the market to eventually break the low, and with this break of this low, there is a significant zone which is entirely an imbalance in the market, that expecting the market to eventually break that low and then to potentially reverse back to the upside here in that market. Now looking at the daily, so yeah, we drop down to the daily. Now this is how I look at, we trade on 1 minute, right? Looking at monthly is sometimes illogical, but in fact it's logical, right? Because you can't find everything in logic. You need to use logic, reason, and also experience. Okay, if you look at one of the worst thing that happened now, every aspect, trading, everything, you see that if you look at go to the famous books, self-help book or any other books, every book will tell you that you need to add a component of looking at or finding something beyond. Okay, so therefore logic, reason, and you need something more, all right, which is entirely, I would say, that individual and also higher. And that's where you started to see a clear picture. Okay, because if we only depend on logic and reason, which is some philosophy called it as a nihilistic approach. So nihilistic approach might not work. So therefore we need to look at from all angles. Now that's looking at here daily. If you look at the that's why this is where I came to the point where if you look at the 1 minute trading, then why you need to look at the monthly, because of the flow, right? Flow is important. Now imagine that you are in a river, right? A big river flowing, right? Now flowing in that direction or in this direction, let's consider it upstream to the downstream. The river is flowing in that direction. Now you need to take a small cup of water. Each trade is a small cup of water. 1 cup, that's fine. Either you can put your cup this way or that way. But if you consider that taking 5,000 cups of water, it matters how you place the cup here, in this direction or in this direction. Because if someone is placing just the cup here, he doesn't have to apply any force. He just put the cup, the water will fall in, bring it back here. Place the cup, the water will fall it back, bring it back here. But if someone is going opposite direction of the flow, that means rowing the boat against the trend, then the water will go in that direction. You place the cup in the direction and you have to go faster than the stream or the flow to fill your cup, and you'll get exhausted with 5,000 cups. So the trading is like that. How many trades we open every week or days will matter when you look at the flow. And that is why it is so important that each trade will look at the flow in the market. So therefore it's essential to look at the higher time frame to see the lower time frame directional bias, how the market is doing. So therefore from technically we are looking to see here that today the market after the open, the price has gone back up, reached that key level, and now it's getting that rejection, that see high expectation on 1 hour. Yeah, so from the daily, if you look at today's price has crossed this high and then showing a long week doji where you could see the market eventually to have a return back below here in that direction for this move down here. So from the 4 hour here, that you can see the market has reached that key zone, and here is what you can see from the 1 hour that I'm looking at, guys. Here there was, if you look at here, we see few trades that we have opened. There has been multiple false breakout. Now this kind of structure is sometime happens, it's sometime interesting, which what I call the expanding structure. So if you look at, you see that the market has created a resistance here, the price has dropped to that, gone back up, gone up, crossing that high, again drop back down, gone back up again. So every time whenever the price is hitting that key level of resistance, it's just getting a little bit extended above and then rejecting. So therefore, when you see that the market is creating this structure, those kind of structure usually had a stronger break, because it's every time going up, collecting or I would say the fuel, which is the liquidity, which is the fuel of the market, and having that reaction back below. So therefore, if we look at here on XAUUSD, we can expect this market to eventually drop down here in that direction, and that's what we're looking at. Here's the move, and currently if you look at here, we see that there is a pullback, and that pullback is essential to look at here now at the moment for us to be able to look for sell. And I'm looking at still here potential sell, as this is a high area of value. Now coming back to the lower time frame, we found a higher stream, that means that higher time frame bias buys. By the way, traders, if you haven't liked this stream, make sure you like so, and also subscribe to the channel if you haven't done yet. And before you progress further, welcome. Thank you. Okay, so now if you look at here, this is the 5 minutes. That means that smaller time frame resistance line here. Now this move that you can see already on the 5 minute chart, from this point onward, it reached this high area of value. High area of value means that higher liquidity zone. As the price moves from liquidity to liquidity, as the market has reached that key level, they're expecting this market to eventually drop down here. Now let's look at here in this zone. Okay, so now here guys, we see that there is a potential for the market is on the 4 hour resistance, on the 1 hour resistance, and which is key to look at, right? And let's see that here, this is a resistance line. This is looking to see. Okay, so we can see the market has reached. I will be interested to potentially open a sell with proper risk management, as the market has been able to reach that key level of resistance. The market may go for another retest, but I think that the price in a zone where there is a potential for another wave of downside here in that market. So here guys, this is where I'm looking at potentially a sell opportunity if the market managed to successfully break that low. Having a proper risk management, of course, it's only few pips stop loss that I'm placing here. If the market doesn't go in my favor, then I'll be out with this trade. So here, that looking at, this is a sell trade that I'm opening of this level. So I have opened sell for this, and we will be discussing in depth the analysis, because when the trade comes, it's important to do the risk management and opening at the position. All right, so you have open, and I have also opened and also shared the same trade in the premium group. Now here is what we are looking at for a possible a rejection of this, because the market has reached that key important area of value. Now it may still can go back up, but what we can see, there is a back-to-back two liquidity candlestick pattern formation that are expecting the market to have that move here, and we want to take here at least to with the current volatility a decent number of pip that will give us an entry. Now I'm still on a technical aspect, right? Let's look at also the fundamental as well as the sentiment. Now this is a trade that I'd like to take a bit of down, and we are on the profit running. Let's first secure some pip here before we look at the next one coming up later today. And we are 20 pip up on this. Let's see that you will be running it or you will be taking it. So here is, if it drops back below here, that can bring little further. So let's see that how this 1 minute candle is closing is important to see, as the 5 minute candle close here with a large red bearish engulfer. Okay, so if it is getting rejection, that I would like to hold on to that trade for a bit more time. Okay, so here is the market creating this, if you look at here, a long bear candle that expecting it to deepen further here in that area, and they're expecting the market to eventually come lower back below in that zone here. And okay, so we will be looking to see here for the market structure to form a potential further downside, because as the market has broken out of the structure, if it is a trend continuation, you would see another wave of drop back below to this support level, right? So you see there are kind of reaction of this lower time frame market structure. The market, this is also a crucial, patience is absolutely important, guys, because the market, you see that drop and then gone back up. So you'll see that it's gonna create a roller coaster in terms of the price movement, in terms of your trade movement. And that's where most traders fail, because, during that movement, also there is a stronger emotional emotion comes in trading, where you more often change the stop loss, or unless you have a strategy, but due to the emotion, change the stop loss, change the profit target, or like doubling up positions. Many other things happen, which is psychological mistakes in trading, which is a very part of trading. But that's where the trading in the live market will give you always a better understanding of what might happen here. So at the moment, looking at the 15 minutes and the 5 minutes here, okay, so if this move on the 5 minutes fails, that's gonna bring that market potentially further down here. And 30 minutes market structure as well showing up. Good day, welcome. Come on. It bounced off this level and reach a point where there is a double top, and we're gonna see that closing further lower. Okay, getting rejection of this double top will be a crucial move if we see the market is in fact getting that rejection off. I will not be surprised if it goes back up further, because the market is, this is where might grab that more liquidity. There is a narrow doji. It's at the top. Waiting on that. And price is approaching another zone of higher liquidity. Now this is 1 minute market structure. Are you going to see potential head and shoulder, which is not unusual to see that it's gonna come back to this support again to 5,000 level. If it drop down to 5,000 level, which is 5,002, from 5,000 will be good move in fact of this zone here to the support. Welcome traders. I hope that you're enjoying the live session. Make sure which sir, can you teach how to do option selling in crypto? Okay, good day. Which tool do you use for peep counting? And I'm using XNES. Okay, so for the peep counting, that means the lot size calculator, right? I used an automated version of the lot size calculator that you can find a lot in online, but it's much easier. Okay, so if you look at that on how to calculate the lot size, you can find online, or if you are our member in the academy, you can find a tool on your student dashboard to use for calculating the lot size. And which is, yeah, I'm on the trade. Yep. Of course, I'm on the trade. I'm running it with all of you guys for a possible move down here. They're expecting, as the market got rejected off this key zone, there is a move here, which is a one single move. There's a chance for to be a false breakout and then to return again back below here in that area. All right, so you are looking at that zone, and at the same time, that where you can see the market is here after crossing this high with this one single move. Now when the market goes like this without any proper pullback to any key level, chances for rejection back again is higher. So you are seeing the market in those areas here. So wait to see. All right, so you could see a possible a rejection of that key zone. It's a narrow candlestick pattern. As you can see, there is a 15 minutes candle closing before the 1 hour close. There is a narrow rejection again of this. Market is on the 4 hour resistance line. Okay, so it reached in a zone where it also form a double top, and with a double top, it's an overextension now at the moment. Okay, so while we are learning that, we'll be looking to see what kind of current fundamental is on the market. If it doesn't work, we will be going back again. The market has reached almost the 4 hour from this support back to the 4 hour open and close. And I'm still holding on to that. Okay, so let the market now pull back, and the chances that the market reach another key area of value, which is the resistance here and also resistance here. See that how the market react to that. Still very high chance for the market to drop again down back below as it reach another important area of value. So I'm holding on to that. While you can see that because the fundamental is absolutely important and also the sentiment. So let's see that how we see that the top here, that RBA statement by monetary policy. So we saw earlier, if you look at the calendar, there has been some interest rate this week, the full of interest rate decision and many other important factors. So I think there has been some the rate hike. Let's see that where. Yep. So RBA statement by monetary policy board. At this meeting today, the board decided to increase the cash rate target by 25 bias points to 4.1%. So okay, so there is a interest rate hike on RBA. Now this is a major news for AUD USD and also for gold. Now the gold is highly tied to AUD USD, guys. This is something always keep in mind. Trading is not only trading. You have to have an in-depth understanding of the market structure and also the correlation. Okay, so the correlation is important. How to correlate currency pairs along with across instrument, right? For example, if you look at the WTI is highly tied to oil price, right? Like that. So CAD is highly tied to oil price. So AUD USD also tied to gold price. Might be asking why. Let's understand that why. I'm still looking at this market here. It's a very unusual move, but are we expecting that to drop back below to the support? Okay, so quickly having a snapshot of this is an important information. So for the top 10 gold producing countries in the world is China, Russia, and Australia, right? So Australia is one of the largest gold produce country in the world, and in our currency pair we don't trade Russian ruble or rub or Chinese currency. So therefore AUD USD is now highly tied to the gold price, because in major USD currencies we trade AUD USD, right? Like euro dollar, British pound, US dollar. Now AUD USD is, so AUD USD is highly tied to the gold price, right? So that means how we can see that the policy rate on AUD also will have direct influence on XAUUSD movement. Now let's understand that how it works, right? This is why it is so important, because all those interest rate decisions that you can see also tied to the gold movement and all of that. Now, how does this now interest rate decision also influence? Now, I've gone through earlier today this news, so it's basically as there is a higher chance for an inflation, right? I have, guys, for those who are on the course, that don't miss out to check out the fundamental course that I have, only 1 or 2 pages fundamental, guys, because you don't need a very complex logic, just simple logic, right? Rate cut, devaluation of currency. Rate hike is potentially good for inflation. That means less inflation. If you see that there is a rate hike, now we think that there is a rate hike, there's a mortgage going up or maybe other expenses going up. Guys, you pay more than with the rate cut. How? Due to the inflation, because when there is a rate hike, you only potentially paying probably the mortgage. But if you had a high inflation, you're gonna pay everywhere, right? Everywhere. Now with the current geopolitical, you can see there are many factors currently. If with the current Middle East war and many other reasons, the inflation goes up, then it will be everywhere. So it's sometimes something that it's a cycle. It's like you can't avoid winter, right? You can't avoid summer. Something comes up based on the nature that we can't avoid, but what we can do is we can prepare for it. Now, how do you prepare? By adjusting some of the key factors to look at. So with that one here, now with the RBS policy, that means the rate hike, could be that potentially to combat the inflation, which I think usually, because when there is a rate cut, usually the currency get devaluated, because there are more printing of currencies. That's how the central bank has to do, because if they had to provide the budget that needed and they don't have the money, they have to print it. And when it is printed, the money that you have in your bank account, 5,000, even you don't know that it became 4,000, right? Even without knowing it, because it's devaluated. As soon as the money printed, your money in your hand, you see still a $50 note, but it became a $40 in essence because the price of goods increases. All right, so that being said, let's look at now in the market. It's that's why being a trader is rewarding, because when you become a trader, you usually have more freedom to earn, to grow, to learn as a trader. So now here is what you can see the market. We came back to our support area. They're expecting the market to now potentially to respect the low and to potentially break this low here. And this is a key support zone that we are looking at. Okay, so we see the break below. And here is to look at the market to eventually come down here. Okay. We might be able to see that drop back below here. Good afternoon, Coach. I'm struggling to. Okay, thank you very much. Okay, it's keeping down, keeping moving down. Okay, now we are seeing that potential movement. I'm still holding on to we just came at the entry level. So we are at the entry point where you have opened the position here. And crossing back to the upside here in that area. Welcome. We're getting down here back below, and here's the market. From this top, the market is coming down back below. We could see the market here to break that support, and I want to see that it's breaking that low here to this support level. Awesome, it's breaking low, and we got good move, and I would like to take this move here now. All right, I'm still holding on to that. It created a significant drop here. Okay, so you can see here that the market of that zone, it's trying to show that pattern back below, and where the price is breaking that low and expecting the market to eventually trend down. I'm still holding on to that. Now, anytime I'm closing because I'm in profit and I'd like to take this move here, it's on the support level, and there is a higher chance, because there is a false breakout, there's a higher chance for the market to drop down further below here. Now going back to some other the current today, so we have few higher news that we have seen. So here is the previous news that also, I think Governor of RBA has warns that inflation risk. So there's a higher risk, and that's the way to combat that inflation, because in that way, you know, if there's no inflation, it's equally distributed to everywhere, right? You know, so we need to buy and sell things, and in inflation in trading also, guys might see that the commission has gone up. Anyway, lucky that I use a broker that I easily can execute my positions. Okay, so here is what you can see from this open and close. The market has come back to 45 pip move, and I'm taking this position now out, and I'm happy to take this move with this, because there is a potential for deeper pullback. Got it around, you know, depending on what you are looking at based on the volatility. I got a 45 pip move up. Awesome, thank you very much. And now let's see that it's just the beginning, right? We have more trade to take on, but I would like to see that. I would like to update in the group as well. Okay, so here is the market is now in that direction of this move, and I would like to take some more position. But before we go to that, let's understand this trade here, why you have taken this trade and how the market might be doing here later. So let's look at here. And in the meantime, have you subscribed to the channel? If you haven't done that, you can do so. And also don't forget to like this stream, and let me know how many people you have been able to secure with this trade, and we'll be looking for the next entry shortly after here in that market. Awesome. Okay, so here is the market is in that zone here, showing up. The market may eventually cross that low here. Good afternoon. It's cracking that low. All right, so hawkish meaning in trading. There's interesting news. You know that. All right, now the market is in that move that you can see. It's maintaining that movement of this, and at the moment from this zone here that you can see the market is slowly building that move, and we might see further bearish movement in that area here on XAUUSD. Right, so we could see that move. And now if you look at from this high here, this is where the price action is potentially melting back below to this support level, and we are looking at this move potentially coming to this support here to create a new lower low. All right, so there is a 1 hour candle close, and you can see the 4 hour also. There has been significant move with the 1 hour candle, the market has just suddenly got rejected off that key level. And with the rejection, the market may drop further downside here. Let's see that. And now before we go to the next trade coming later, I'm looking at here also the upcoming calendar. All right, so today is, if you look at today's 17th of March, where later today there isn't any significant news. So we'll be looking at more trade coming, because based on the tomorrow and after tomorrow's big, some of the decision coming also will be impactful to the market today, that if you look at. So we are looking at here that on tomorrow will be a big day as PPI coming up, followed by also later in NOI session gonna be federal fund rate, FOMC economic projection, and also FOMC statement. So if we look at those interest rate decision coming later tomorrow here, which the FOMC usually changes the statement slightly at each rates. Okay, so few more, it's primarily tool FOMC is used to communicate with investor about monetary policy. It contains the outcome of their vote. Okay, so some of the reasons why the market, the FOMC has been done. So basically this zone that you can see, all right, so in that area here where there is a higher possibility now for the market to move a lot. Now, if you look at quite a few, central bank is coming up with quite a few interest rate decision this week. We will see that SNB, okay, FOMC, almost all of them. Now, one important thing, we might see some bank might be hike. There is a rate hike or there is a rate cut. It also, if you really curious about trading, you need to know that, guys, it's not the same results for all. Okay, this is where the real trade. So if you blindly trade, for example, okay, on AUD there is an interest rate hike, so it's good for everyone. Hike may not be good for everyone, because rate cut and rate hike also depends on your total, what's your economy is based on, right? What's your economy is based on? Do you export more or import more? How much inflation currently you have? See, let's say a country has a very low inflation, okay, probably is good to cut the rate rather than rate hike, because the inflation and overall the currency intrinsic value is important to understand how the import and export will perform over a period of time. How much debt you have, also important, right? How much debt you have, how much your budget shortage, and is your economy is based on the domestic product, or you need to export or you need to import a lot. Okay, so therefore then it can be different for everyone. Probably one currency good to hike the rate, the other might be good for cutting the rate, depending on the situation the currency is in and the economy is in. So if you want to use in your trading, as a trader, you don't need to think of either there will be interest rate cut or there will be interest rate hike. The only information that you need is what is going to be, right? So if you look at here, there's nothing to do with us to either rate hike, because if we see that a currency is having a different outcome than its projection, it's gonna be potentially volatile, and you can look for trend entry, right? That's how we look at. So if you look at, let's see that today, how was AUD/USD? Okay, you see that AUD/USD has increasing momentum, right? If you look at, this is the daily market structure, and this is what I was talking about, guys. Look at the ATR of this. This is the 4-hour price action. You see? Now compare it, this few candlestick pattern, compare it with this, the overall move. I think you may not find this kind of stronger, bigger, full body candle, anywhere in this area, except there is some move here. So it's because of the event, right? So as a trader, is more important than event than the outcome of the event, because there is an event in this situation. You'll see the market react to that because there is a increased move and there is a predictable trending move happens. So that's why it's so important. Now if you look at AUD/USD, it's getting so far from this support level, getting the rejection here. And what I think that this instrument, if you look at now on DXY, that I would like to look at, there's some kind of deeper pullback on DXY. If you look at the daily close and today's price action of this, the market slowly breaking below here, and that break of this, if you look at the daily low, it's breaking that support level, and because it's breaking that support, we could see that the market to come back here to this zone here, right? And now there is a higher chance that DXY may be coming for this steeper pullback here. If that's the case, because there is the higher interest rate, AUD might be more like expensive. So with the DXY pullback, we might see that AUD/USD is in a bullish trend. That's the information that you need, right? Because it has an interest rate hike, that AUD might be expensive. If the AUD is expensive, and if DXY is coming for a pullback, there is a potential for an uptrend on AUD/USD. That's all you need to know for an entry to trade the market, unless you are not investing for years or investing in bond or anything like that. All right, so we have secured that position on gold. Now look, going back to for another entry potentially. If you look at daily, again the market dropped to that support. What's your bias now here on gold? It bounced back again. I'm going to delete those levels here, and we will be looking for the next trade entry in that market. It moved back again in that zone. right, I'm gonna have a music here a bit of louder so that you can wake up for another entry. Ready? I've been seeing a bullish expansion of last 2 hours. My TP50 TP1A 5080 5104. So you're gonna had a big trade. 5080 is at that's a bit. It has to change the trend. If you look at the market to go that far, then it will need a change of trend. I don't think gold is going to, it can have done, but I think gold is still showing downside here. All right, so I would still be bearish. Let's see what happened, because the market here, you can see that it got rejection, okay, multiple times. So the chances for this market to eventually break that low. You can see again it expanded and getting rejection. I think at some point you see this market will eventually continue to trend down here. It might be forming my risk is very low. That's a very good point. Look, this is what I was talking about, guys. You won't be able to win all the trade, all right? The key here is to have a full control over your trading account. You can apply many strategies, right? I know a guy who long ago, and I'm not recommending this strategy, neither I use that strategy, but I know that long ago he used to use this strategy, but it's quite worked for him. But these days probably may not work with the current market condition, because if you look at the 5 years back, now it changes everything, because the market has a cycle, like the economic cycle, and one strategy that worked 5 years ago may not work now, or 10 years ago may not work now. There are many factors involved in it, okay? Because If you look at the 1 second price action, then you see how the market moves. There is always a rhythm in the market. So that strategy was, before the news, he used to place, let's say, $100 or $200 in one account, and then he just buy at that level, placing a stop loss at almost 100% gain, and let the market to just bounce in one direction, right? More often in news it happens. So his idea is that, okay, I place $100, if I take, let's say, one trade and I lose 1%, it's nearly to $100 minus. Now, instead of placing a stop loss, I place $100 in one trading account, and then I buy very small 0.01 lot, and I place it to go to $100. So that way he is not doing anything. He just news is taking that market to. So in his idea that he has almost 100% profit target for those. So that's how he uses. So this is one way that some people do that, but I don't recommend, and I don't do that because this is not any logical or proper strategy. But million kind of trader that you can find who are trading, at the end of the day, it's about your experience as a trader and how you want to grow as a trader. Are you able to sustain long enough in trading with the strategy that you are using? That's the question. And then making it as for the freedom, right? Okay, so here is what you can see from here. This is the support that going back to the upside here and going to the key level of resistance, and here the market is approaching that area. There's a resistance line, and now you can see that here there is a breakout again from this support. We are out with this trade. Yeah, so this is what I was talking about. The risk is low. Okay, so if you have a low risk, and it's all about what's the code? Iteration. Come on. Yeah. Iteration, repetition, the process of
iteration.
Okay, so it's all about iteration. Come on. Okay, so it's all about iteration. Okay, so you need to be able to iterate many times with the same philosophy, same strategy, and that will create a neuro connection in your brain, right? That's the key, to create a neuro connection. What's the advantage? The advantage is very simple. When you create that neuro connection, okay, with iteration, you might say, okay, what's the connection with the neuro connection and the iteration connection? It's entirely connected, right? Because your brain is an antenna. You see the television, TV, there's an antenna. And when you do the neuro connection, it's going to find a way to flow through that, because energy flows in the direction of least resistance. What does that mean? It means that the job of your brain is to not to look for what is good or bad, but to repeat what has been done to preserve or conserve energy. Therefore, if you create a habit or a pathway and repeat it, it's going to find a way to recreate that event, recreate that reality for you over and over again, and you will move through the space without even you knowing it. There will be new layer of experience will unfold for you based on that neuro connection to strengthen it, because ultimately your brain will find a way to exist, okay, by creating that repetition. So therefore your job is to make sure that you repeat that, you do that, okay, iteration. Hope that makes sense to you. Some music on before we look for the next one. I'm really looking to enter a few entries because this week is crucial, as with the FOMC and quite a few interest rate decisions in the market is in fact creating a bigger and larger candlestick pattern. How are you using those charts indicators, and what are the settings, if you don't mind sharing? Of course I don't mind sharing. Everything is open here for all of you guys, except my password and username. So if you look at here, I'm deleting those lines, and here is what we are looking at. So first of all, 2 indicators, and I have another one which is the premium, which is directly providing sell and buy signals. So if you look at the previous one, also open based on that. Now the first one is the blue, that is a 20 exponential moving averages. So if you look at 20 close, all right, that's a 20 EMA, which is the 20 exponential moving averages, and the style, the visibility, okay. So and if you look at, okay, length 20, so if you go to the indicator section and then type EMS or exponential moving averages, it will appear, and then just double click on it. Make sure you keep it 20, and then the rest you can keep as default. The color you can choose. The next one is 10 exponential moving averages, okay. Now the question is, that's all, what's the role they are playing in the chart, right? Those EMS, how does they interact? Now I'm using them so long time, guys. How the EMA is like bending, that gives me an idea what the market might do. It's due to the experience. As I mentioned earlier, our brain is incredibly smart to find a pattern in everything, because brain is a pattern finding machine. That's all it knows, okay. Now if you look at here, for example, when the market is like that, you also can do that too. How this 20 exponential moving averages is bending its curve also give me an idea of the market, how it might do. For example, if I look at here, okay, how this 20 EMA is, you see there is the sharp bend. It's a sign of breakout like this. So those when the market form those kind of band, okay, let me show you here. Yeah, so with this band, with this candlestick pattern, giving me a very higher possibility this market will have a breakout like that. So many other ways that just easily can be understood, but it's an advanced ideas. But I would usually these moving averages are an indication of trend, right? In the old school, people use the moving averages as a crossover. Moving average crossover also a very good strategy if you can use it in the right time. You see that whenever the market crossed the moving averages, it had a big drop. So why the big drop happened? Because the buyers and sellers selling the market, right? So that's how we can look at. And Also, it uses, you can understand in relation to the moving averages where the market is. It's a kind of the rubber band. Okay, so if you look at, have you ever used stretched a rubber like that in both direction? Let's say this is a price here. The further you stretch when you release it, the faster it's gonna come back to the price. So the further the price will go from the moving averages, the faster it's gonna come back again. All right, so looking at how the market now, you see there is an initial move in that area. XAUUSD, no problem at all. The rubber band analogy is a good one. The rubber band, okay. I have only ever had one other trader use that analogy. Okay, so yeah, this is if you look at that, it's the way we can look at the price, because you need a reference point to understand actually where the market is going from the mean value. Mean value is important, right? If you look at the monthly or in any instrument, all right, so you'll see that there is a tendency, which is, I think there is a name for it. The tendency is that the market always had a tendency to come back to its mean value. So if you look at the monthly, that's an approximate line for this mean value like that, right? That's a mean value for the market. So usually the market had always a tendency to come back to its mean value, because it's a psychological. When people see like that, how you think that, okay, this is the low, this is the high, it's too high now, or it's too low. So the middle is where the potential for the market to move. Okay, guys, I hope that the stream is on. It's streaming well. Got a sound here. Can you let me know if you guys can hear? Thank you. Stream is fine. Welcome. Cool. Low and high. Yes. Okay. So here is, if you look at after this drop down, the market now in this zone here. Before Our said going to down. Yeah, we are right. So we have taken our position, right? We have closed our position. When we we sold, the market dropped and we took the position, right? That's how trading is. Now, it's all about probability, right? You might be predicting a market in one direction, but if you are not fully in your probabilistic confluence, you're not gonna go. If you look at the daily here, the price has moved up of this level. Anytime the market is going up is an opportunity for you to sell. Okay, so it's pushing back again. Yeah, thank you very much. Why did you sell? We closed the position. And in a falling market, you need the market to go up. Otherwise, how can you sell, right? In a buying market, so if you look at in a buying market, you need the market to dip before you go long. So let's say market is technically bullish, but it's dropping or coming down. Wait, it's good news. That means it's coming for a pullback for you to go long again. Right. So if you look at this market, it's straight going back, and if it cross 5043, it's gonna again ready for sell. Right? You need an up to see the down. That's paradoxical, but that's how it is. You need a down to see the up. I think it will, yeah, from yesterday. Thank you. Oh, you see, you're running a trade from yesterday. That's really interesting. Here's the move. The market is approaching. Now, because there is a breakout that you can see, this might be entirely a false breakout and could come back down, but it might even cross this zone again, 5044, and then can continue to drop. And we opened the sessions volume, right, earlier. This drop that you can see, what made us to open this trade here? Let's look at the analysis here now. Now, when we open here, the market is in that zone. If you guys look, for those who have looked at in the beginning of this session. And the prices crossed this high, grabbed the liquidity and rejected back below. The reason is simple. If you look at here, it's a downtrend, maintaining this series of lower high and lower low. And we saw that there was a breakup structure, drop down. This is the first breakup structure after quite a few series of lower high. Therefore, the chances for this market to drop again is higher. But we have seen it again has bounced and then eventually returned back below in that zone here. And in the meantime, if you like this stream, don't miss out to do that. Okay, now we are looking at here for more trading opportunity here in that area. And it's a bit big. There's a big red bearish and golfer. It's coming here. You want to sell trade? Not yet, because it has shown an uptrend here that I will be waiting a little bit, because the market is, if you look at here, that it strongly bounced back to the upside, and with that movement we may see that the market there is a potential for another move, but if it reject, then we are looking to open position. But here if you look at after this move, it might move in a sideways, grab liquidity, and then could reverse back below. This could be a fake drop and then continue to rise, or we might see that entirely coming down here in that zone. We'll be looking to see how the market might be playing out here in that area. You're gonna enter a sell trade, not yet, and we are looking at, and also I would like to post a poll here. So let's see what is the market is heading to. With this initial rejection, the market, if you look at the daily, is possibly going back to the daily high. Now here also like to see how the DXY is performing. If DXY is coming for this deeper pullback, we might see that gold to reverse, right? Now let's understand that what DXY might be doing. there is a very high chance for DXY actually not to dip here. What do you think? There's a very high chance for DXY just to test that and then close above. Might be ranging in this with a smaller narrow zone or going back to the upside. From my experience, the way that we see the market structure here, it's a strong buying pressure on DXY. So anytime the market will break that low, the buyers will push that market back above. Because with the current market condition, dollar index might get more expensive here. So it may not be easier for the current seller to break that low, and this is a strong bullish fair value gap. And whenever the market is potentially coming below, especially passing the previous daily low, a higher chance for the market to go back up. And this is current daily market. If the price reject, you might see that at the end of the day, the candle closing above here as a green candle. And that might push that market further upside here. This is a probability, as we trade based on the probability. Now, if the DXY is not being confident to be bearish but to bullish, gold is potentially confident to be bearish. And the gold price action that I can see looks like a higher possibility for further bearish move here. Okay, now you can see the consolidation. What kind of market structure is forming on gold based on that? And before we progress, as I mentioned, I'm going to post a poll. Poll really helps. What is your bias on gold today? Because anything can happen. So bias on gold today. Okay, I have posted a poll. Don't miss out to cast a vote on the poll, because in fact, in 95% of the time, the results came out to be correct. Okay. Now here gold with this consolidation here, right? After this drop, we see there is a extended consolidation pattern. Let's analyze this consolidation here, how the market is in fact doing. So if you look at this, is a channel that we have seen the market has created to go up. Usually the market does this more often. Now see how the market has done with this channel here. It has broken off that channel and then retested this support as a resistance, and we can see that there is a rejection of coming off that level. Okay, so it's creating a long wick. It's the 1 hour market structure, which is now progressing towards another session, right? See that. And with this move, if you look at, this is a pretty long wick candlestick on the 1 hour. It's getting the rejection. That might be so it is becoming a doji. This is the 4 hour, right? Now this 4-hour candle, if it is closing as a doji, even like that, even closing like that, it is still a possibility that the market is for downtrend. Now after this 5 minutes candle, so we have 2 more 5 minutes candle. If the next one is going up and then creating a long wick, we might see the downside here. Will we consider selling again as soon as we can find that suitable entry confirmation here in that area? Let's see that if the before the 1 hour candle close, if the market again goes up for another deeper pullback here in that area. Find that buying when price is near the 30 RSI. Find that buying when the price is near the 30 RSI on the 5 minutes often results in successful trade. And in the meantime, traders, if you haven't joined the Telegram, you can find link below this video. This is a free Telegram where you can find our regular update as well as the trade ideas and analysis. There's more often promotion is being posted on the free Telegram where you can access many of the educational content as well as the ideas being posted. I have shared in the chat. You can join that to stay up to date. Okay, so at the rate of about 60%, I use same strategy all the time and I have winning rate 63%. At a rate of about 60%, I use same strategy all the time and I have at a rate of about 60%. Okay. Have we backtested it? That's the question. I find buying when the price is near 30 RSI on the 1 and 5 minutes often results in. Okay, so when you are if you are using the RSI, okay, guys, this is very important. Now, just being on the 30, all right, so which is your, if you see that the RSI 30, that means if it is a minus 30, then oversold. And in an oversold market, you might be thinking of buying without considering the trend. So firstly, I never open, I used to use RSI a lot. I never open trade based on only on RSI. This is the first thing. Secondly, rather than just buying from overbought and oversold, look for the divergence. And divergence can be what I'd say that a confluence at your entry, okay, not as an entry criteria. Because in an uptrending market, so when the trend is stronger, it also goes to an overbought or oversold condition, but it's just basically a trend continuation can happen, right? So divergence might be a zone where you can see there's a fake volume, or the market exhausted, and you could see the market is moving, but actually it's, you'll see that the RSI showing a different, that the momentum dropped, but the market is going, so there's not volume in it. So it's basically another way is looking at the volume. Okay, so if you look at the RSI, let's say, all right, like this, and the price is here, okay, the RSI value is here, and the market is here, okay, and now you see the RSI indicator showing that the curve is still down, or at this level the RSI is going up, the market is still dropping. So that's where the divergence is created. Divergence means that there's a disagreement between the price action and the momentum, which is a divergence. So if you look at the price action, showing still creating a lower high and lower low, but the RSI momentum might start to show higher high, right? And that is called a divergence. So divergence is a momentum indicator, okay? So showing that the momentum is dropped, though the market is showing some momentum where the volume dropped. So that's where the high probability entry comes in play. So this is only the effective thing that can help in RSI. Sometimes we can use the CCI also, which is also another momentum indicator. Both of them can be combined together. Yes, divergence is a good confluence, yes. RSI, Bollinger Band, and yeah. So Bollinger Band also very effective. If you, as I mentioned, you can't mix up all of them. There is a term called the analysis paralysis. If you look at everything, you're gonna get yourself freeze that which one to do and what to take. So if you look at the Bollinger Band, the market has crossed the upper band or the lower band with an aggressive move and then strongly rejected back below the band, or after a breakout from a consolidation, breakout from the Bollinger Band also effective to trade, depending on what strategy you use. But the best strategy, I use, there is no proportion, no strategy that I haven't used. But what I have found, guys, that simplicity is the best to trade. You see that all those robots that I am using, it's basically a strategy programmed. It's very simple to use, right? We had a semi-automated robot. You just need to press buy or sell, and that's all. All the settings is done. The simple strategy is the best because market is all about probability. Okay, so what is probability? Probability is like the Schrodinger's cat experiment. Inside the box, if there is a cat, that you close it for few days, and if you go to open the cat, is the cat is dead or alive, is the answer, is the probability, right? It might remain at the same time until you open the box, dead and alive at the same time in a superposition, right? So like this, before you when you are opening the trade, your trade is in superposition. Either you're going to win or lose is at the same time until you open the box. So understanding that will give you a better understanding that how trading works, that there is only that you can know is what you don't know. And that's how it works. So therefore, as a trader, it's important to look at that what is the simplest way that you can trade the market. All right, so let's look at here. Now again, going back to this 1 hour, there's a 1 hour candle close coming, which is a rejection of this higher price. Now, with this 1 hour candle close coming in 10 seconds, if this long wick was coming from this, I would look to sell. It's still there is a potential for down, but if it was coming from here, I would look to sell to this level. There might be now again some kind of pullback here. Now it's form a structure here. They might go back here and then to return again back below. What strategy do you use, sir? Welcome. Yes, divergence is good. Smart money strategy from a so use. There is only one strategy that if you can effectively apply. Okay, no matter how big is your trading account or how small your trading account, it's gonna work. Okay, and that's where that I settled on trading the market. And I think that regardless of how the market changes its course over time, the strategy will remain intact. Okay, look for key levels. Okay, look for trend and then wait for breakout of that key level with a larger ATR candle to the order block or to the key level and let it reject off that larger ATR one candle or few candles and trade that. That's a smart money trading. Okay, it works every time. And there are more in-depth. If you are in the academy, I have a hands-on training session and also video lessons on the Telegram group now available. You can go through all of them. If you're in the premium group, then don't miss out to access those lessons at the top of the Telegram. It's pinned now. Okay, beside the website, you can find all of them. And that's the best lesson you can learn. All right, so with this 1 hour candle close, what it is doing here, it's going back up. Okay, so you can see that here from this high, this is 1 hour price action, and it's getting a reaction of that key level, and that might bring another potential trading opportunity for this move. Let's wait to see. Ready for another entry potentially from this high. Okay, so here this is 1 hour candle close, and the market is going to go for wick fill. As I mentioned earlier, guys, that we saw that there was a potentially going down. Still, it's going to go for a wick fill. Now, if this wick was crossing from here to this level candle close, I would look to sell. Now, it may try to go back again for another wick fill, and here's the 4 hour candle close coming in few minutes. Now this 4 hour candle close is really important, because before the candle close it can go up, okay, for a huge liquidity sweep. Now this is the daily high, right? This is gonna be another important move that we could see. And if you have a passion to be a day trader, this is the best tip, guys. Either whatever you are doing, if you want to be a day trader, you can make a great career of becoming a day trader. Okay, you be your own boss, you can have your own time, though you need to trade on session in the live market, but it's freedom, right? Let me tell you one key thing. To be a day trader, you need live experience, and that's why I really recommend you to watch this live session. This is where can you find anywhere other than the social media that's showing you how the smart money is trading. No one is gonna show you how the smart money is trading, because it's very confidential, right? And this is where we are learning the real market trading. So don't miss out this live session. Firstly, here if you look at, if you want to be a day trader, observe a session candle from start to finish. This is the first criteria, and see how market reacted during this full session. Patience needed, because you see that all those candlestick pattern you can see, they are closed candle. That means you don't know how the price moved during this lifetime of this candle, because after the close they look same, but if you analyze each candlestick pattern, they have a very different price pattern. Okay, so that means, what do I mean by this? Let's say this is the 4 hour candlestick pattern. Here it's moving up to here, and just last 5 minutes before this candle close, the market has gone up here, and the candle close again here. This could one happen. The other scenario can happen that this candle was remaining here till 2 hours and then closed here, right? But before, when the market opened, it went there and the candle closed here. So they both look same, but this one, just before the 5 minutes, the market has gone up and then closed back below. So because there's a rate of change of price with respect to time, before the candle close was very high, and it reached that liquidity in the market to drop again, that you can see over time with experience. But in this situation, if you look at the market as revisited in the beginning of the candlestick pattern, and the price is closed almost here, is stagnated, there's a chance for another move to go back again to the upside, because it didn't revisit that level for an extended time. So these are the things that you can gain through experience over time. All right. Now, therefore, looking at the live market is important to look at how you can trade this market. Okay, so that you can gain through experience over, by watching multiple times in the market. All right, it's going. Now I'm looking at also the current. We see there isn't any very new market moving news, but this is a big market moving week. In fact, as with today's date, that started on 18th, and tomorrow is 19th, right? During this crossing that time zone. So we are looking to see a big movement, including today. You see the market after creating this false breakout is coming. So there will be a reflection of this move in the market that you can see tomorrow. Let's have slight louder music with a familiar tone. Potentially going down. There's some kind of, if you look at here, the market is trying to look at here in that area, we might be seeing a potential rejection. This is the 15-minute candle closing. I'd like to be more, I'm looking to sell US30. With the upcoming, the US30, that I would say it is better to wait to see. For the US30, we haven't looked at it. We're talking about the gold here. For the US30, depending on what time frame you are looking at, there is a short term. From the weekly, we can see the market is breaking out of this support, and from the 4 hour, that if you look at, market is showing up here. So lower time frame, if you are trading on lower time frame, I wouldn't still look to sell until we see a trend continuation, depending on what strategy you're using. Because you want to see, if you look at the daily here, this is the daily trend, is now in that area, is down. Now at some point you would see that if the market reverse on this lower time frame, we can see an uptrend. So the best entry happens when you can align both the higher time frame and the lower time frame together. That's where you could see that the market is showing its direction. All right, so let's go back to gold again. No problem. It is always a good idea to align. So if you look at here, even with our gold trade, now let's bring back the entry that we have opened in this area here on gold earlier today in this live session that you have secured. See the stop loss here, and we close profit here. Now, what was the bias in this trade that you have opened? Is this bias also long-term trend? If you look at daily here on the 4 hour, that you can see there is a downtrend, and the entry bias was in the direction of the trend. So in both direction, we have looked at a trade that is going in the direction of the trend. And now it's, if you look at here, I'm not going long, and I'm not going to go long until we see a clear directional confirmation. If you look at here, this is a downtrending market overall. So we'll not be going for any kind of sell in this market, buying in this market, until we see a clean change of trend. Therefore, anytime the market is going overextended, we are looking for sell in this market. Just go above this zone. Leaving it here at this level, and to see for our next entry, about Nasdaq during London session open low. So Nasdaq and US 30 usually similar kind of move happen. So depending on again what you are using. H1 and M30. Yeah, there are some kind of, if you look at here, it's creating a narrow structure area in that area. That narrow structure is important to look at because that might be bringing the market back below. Okay, with this initial pullback after this stronger consolidation pattern here in that area, we're looking to see the market to go ahead and then to return again back below. Okay, we'll be looking for the next entry here. For this potential drop down, we'll be explaining later in depth on the strategy. Just 111 pip stop loss here for a potential drop down back below before the candle close. And this is another trade setup that I'm opening on gold. This is sell trade. So with the potential for this market to remain bearish, I have opened another sell, and I believe that you guys also on that. And so with the current market structure, if you look at the 15 minutes candlestick pattern, that candle, they're expecting it to break below, and the chances for that the market to fill that zone and to come down is higher. So this is what we're looking at for this potential move back down, back below here. So there is a 2 rejection here in that area, and that's why looking to see that the market to fall down here, and we are on the second trade for this session and want to see that it's breaking below, so you can secure a decent number of pip for this move here. So with the 15 minutes candle close, if you look at, there is a bearish engulfer here, and we may close this trade very fast. So I'm just on it. If I close, I'll give a shout out, but we want to hold it for decent number of pip. So with the 15 minutes here, there is, if you look at here, is a support level, which is the liquidity zone. The market might try to break that low. Okay, so here we see the market drop back below. Okay, so you can see there is a pullback potentially here, and okay, so there is a pullback, and that might be okay. So you want to see a potential rejection in that area here, as if this market reject off this head and shoulder, that expecting it to return back down below to the support. Let's see that how the market is playing out in that area. It's going to be really interesting if the market try to move up further. I'm going to leave it now. Straight gone back to the order block. That's something really moved faster here for this now before the candle close. Is this another liquidity grab? Look to me like that. With this large rejection of that zone that you can see here, now this kind of move is very rare. So if you look at here, there was a narrow rejection, 15 minutes from a bearish engulfer with a red body in almost in all direction. So if you look at here, this is usually a strong downtrend in those markets, and in those situations, if the market has done this false breakout, potentially for a significant move in this market. Now this is the 4-hour candle close coming. Look at the daily here again. the market is from this daily high, and I think it is also a false breakout here with this daily move. And if that's the false breakout with this 1 hour candle close, the market may eventually come back down here. So four candles on a row. Now, if this move that you can see, it's a fake out, which is highly likely to be. With the current session close from this 10 EMA, we might see the market to again come down to this intraday support level. Any trades? No, I'm out. And now this is a consolidation now at the moment, okay, here on gold. And with this consolidation, the only thing that we can do is to wait for this kind of key level to go and then to look for an entry. So as we are progressing with the end of this session here, I'm still looking for sell entry. And if you look at that, all those positions that you have opened in the direction of the trend, that's the strength, right? You always look for an entry to the direction of the trend, even if not going in your favor. With proper risk management, that's the key to maintain long-term profitability. And I believe you enjoyed this session, you learned from it. Here, more focus is only learning, guys. One trade winning or one trade not winning will not make a big difference. The big difference you will make is what you learn from here, that you can change your trading completely. Make sure you keep that in mind by also joining the Telegram channel. You can find link below this video for more updated education as well as analysis. And also don't miss out to subscribe to the channel. That being said, thanks for joining here, and I'll see you again very soon. Trading live. Until that, stay well, stay happy for the next one coming up tomorrow with big news coming, and we will be trading this live market.